Okay, let's jump right in. The world of electric vehicles, it's moving incredibly fast, and suddenly there's this one company really making waves, directly challenging the player everyone's been focused on.
Exactly. And you, our listener, you sent us a fantastic pile of source material. We've got financial reports, industry analysis, even forum chats that really helps paint a picture of this shift happening.
That's right. So for this deep dive, we're going to unpack all of that. The plan is simple. Cut through the noise, pull out the really key stuff, and get you quickly up to speed on BYD's, meteoric rise.
Yeah, what it means for EVs globally, how it stacks up against Tesla naturally, and the tech behind it all.
Right. So where do we start? The big headline.
Let's start there. The financials. The news that really turned heads, that Saxo Bank analysis you shared. It laid out BYD's first quarter results for 2025, and they were quite something.
Quite something is putting it mildly. Their profits doubled in Q1, a 100% jump. That's 9.15 billion yuan, or about 1.26 billion US dollars.
And that wasn't just meeting expectations. It blew past them, significantly beat expectations.
Yeah, and revenue was up strongly too, right? Like 36% year on year.
That's it. But here's the kicker, the really historic part.
Okay.
For the very first time, BYD's quarterly profit figure was clearly higher than Tesla's for that same period.
Wow.
Right.
Okay. So while BYD is soaring,
Tesla, according to that same source, was grappling with, falling profits, maybe some softer demand, and definitely feeling pressure on their margins.
so a real divergence in their financial stories, at least for that quarter.
Exactly. And look, this wasn't out of the blue, this financial surge. It builds on sales leadership they'd already grabbed. Remember the new energy company source? It pointed out BYD actually overtook Tesla in total global EV sales volume back in 2024.
Right, I remember that. Strong in Asia, Latin America,
Yeah, while Tesla held its ground more in North America and Europe.
and in China itself. That AutoVista24 source showed BYD way out front in early 2024. Something like, over 30% market share just for the BYD brand?
Over 31% for the brand, 33% for the whole group. Compared to Tesla's about 6.5% then. So they were already the volume leader there, and now the profits are really catching up.
Okay, so how are they doing it? What's the secret sauce? The sources seem to point to a few key things, right?
Definitely. Several pillars to their strategy. First up, innovation. It's clearly a massive, massive focus.
The Saxo source mentioned their R&D spending just soared, didn't it? Up 34%.
Huge jump. And the goal isn't just fancy tech. It's making advanced stuff affordable for the mass market.
Which leads to some pretty cool things being reported, like that ultra-fast charging, adding 400 kilometers of range in just 5 minutes.
Yeah, that number jumps out. Both Saxo and, interestingly, that Reddit discussion you found highlighted that charging speed.
5 minutes for 400K. That really changes the game for everyday use, doesn't it? Feels less like a compromise.
Totally. And they're pushing other tech, too, like their God's Eye autonomous driving system,
Right.
rolling that out even on their more mainstream models.
So bringing high-end features down the price ladder.
Precisely. And something that came through really strongly, especially on Reddit, was this idea of their in-house tech strength, developing their own core EV components.
Like the VCU, MCU, BMS, the brains, the motor control, the battery management.
Exactly. The argument made there was that BYD is potentially industry-leading in developing these absolutely critical, complex systems themselves.
That sounds like a massive advantage, that vertical integration. Control over the tech, chips to batteries.
It suggests faster development, maybe tighter cost control, better integration of all the systems.
Makes sense. And speaking of controlling the tech, batteries are just central, right?
Absolutely crucial. The new energy company source called their Blade battery a game changer.
Right. Designed for safety, longer life, and enabling that super fast charging we just mentioned.
And what's interesting, as you picked up from the Reddit sources, they're not just hoarding this tech, they're actually selling the Blade battery to other EV makers, like XPeng.
So there's a supplier, too. That fits with the bigger picture of China's role in batteries, doesn't it?
Oh, completely. Globe Newswire pointed out China makes over 70% of the world's EV batteries. And the leaders, CATL and BYD.
BYD had what, about 17% market share in 2024?
17.2%, yeah.
Yeah.
Just behind CATL's nearly 38%. And a lot of this dominance, as Globe Newswire explained, is built on LFP batteries.
Lithium iron phosphate. Cheaper, uses more common materials like iron.
Exactly. Makes them great for keeping vehicle costs down, which is, a big part of BYD's strategy. And they're not stopping there. Sources mention they're even planning mass production of sodium-ion batteries.
Sodium ion. Even cheaper, potentially.
That's the hope. Both BYD and CATL are working on it. So you combine that battery leadership with what someone on Reddit called crazily good cost control and their whole supply chain setup.
And suddenly their competitive pricing makes a lot more sense, even while posting strong profits.
Right. But it's not just about affordable cars anymore. The Saxo analysis highlighted a really clear strategic push into newer, more premium, even luxury models.
Moving up market. Why is that important?
Well, it's a smart move. Higher-end models mean higher average selling prices and, crucially, better profit margins per car. That gives them a buffer against the really intense price wars happening at the lower end.
Okay, that makes sense. And another key part of the strategy seems to be global expansion, but with a twist.
Yeah, a big twist. They are expanding aggressively, but focusing heavily outside the U.S. market for now. Saxo pointed this out. It neatly sidesteps the current U.S. tariff situation.
And it seems to be working.
The numbers suggest so. Overseas sales more than doubled up 111% just in Q1 2025. Exports are becoming a really significant chunk of their business, fast.
And they're not just shipping cars, they're building factories everywhere.
A serious global manufacturing network. Automotive World mentioned 2 factories already going up in Europe, Hungary and Turkey. And apparently the EU tariffs actually sped up the construction plans there.
Interesting reaction. And elsewhere.
Plants coming online or running in Brazil, Indonesia, Thailand, Uzbekistan, their ambition is huge. In Europe alone, the long-term goal is supposedly capacity for 1 million units a year.
Wow. And it's not just factories, right? Sources mention partnerships too.
Yeah, things like working on charging infrastructure in emerging markets. And that Reddit source mentioned a tie-up with Uber. They're building ecosystems, not just selling cars.
So, okay, we have this picture, powerful innovation, battery leadership, tight costs, moving up market, and this aggressive global push focused outside the U.S. It sounds, well, formidable.
It really does. But, no company's path is totally smooth. Every growth story has its hurdles. What challenges or risks are the sources pointing to for BYD?
Well, a big one that seems current is this intensifying price competition, especially back home in China. That CNEV post source went into detail about recent, pretty widespread discounts on some of their popular affordable models.
Like the Seagull, the Kim Plus.
Yeah, cuts of over 10,000 yuan. That's a decent chunk, especially on those cars.
So why the sudden discounts? The analysis from CNEV Post suggested it's mainly driven by dealer inventories piling up.
Too much stock at the dealerships. How much?
They estimated dealers might be holding 3 to 4 months worth of supply right now.
Okay, so the factories are churning out cars faster than they're actually selling through to customers.
Seems like it. And that report linked this inventory build directly to BYD's super ambitious 2025 sales target. They're aiming for 5.5 million vehicles, a 30% jump. But their actual retail sales growth early in the year was, well, closer to 15%.
So a gap between production push and retail pull.
Exactly. And these discounts in China, they don't happen in isolation. CNEV Post warned this could easily trigger more price cuts from rivals, potentially escalating the price war across the whole mass market segment. They even gave examples of other brands already reacting.
Right. And it's not just about price, is it? The market itself is just packed with competitors.
Incredibly competitive. Saxo reminds us, even putting Tesla aside, you've got tons of aggressive players, both local Chinese brands and international ones, fighting hard, especially in China and Europe.
That AutoVista 24 market share chart really showed that. You see names like Li Auto, Wuling, Aido, Geely, SAIC, Chang, all jostling for position.
It's a crowded field. Now, we should also touch on some of the, let's say, more cautious viewpoints that surfaced in the materials you shared. It's important to present these concerns impartially, just as they were raised in the sources.
Absolutely. Give the full picture. What kind of concerns were raised?
While one perspective, highlighted in that Reddit discussion, brought up accusations about production maybe running way ahead of actual demand, and linked that to questions about accounting practices and inventory transparency.
Okay. Questions about the numbers. What else?
Also mentioned was a potential dependence on state subsidies in some markets, and the risk that poses if or when those subsidies get reduced or phased out.
That's a common theme in the EV world. Any safety points?
Safety concerns were definitely mentioned. Reports of vehicles catching fire, particularly noted in China, leading to questions around battery safety and maybe overall build quality. The source pointed to what it felt was a high number of online reports about such incidents.
And broader risks.
Yeah, the same viewpoint flagged general geopolitical and regulatory risks that could hinder their global expansion. And it specifically questioned the sustainability of potentially flooding emerging markets with very low-margin vehicles. arguing it might be a high-risk strategy long-term.
So these points from sources like that Reddit thread, they add important context. They show where the skeptics or the more cautious observers see potential weak spots or risks.
Exactly. It's not all smooth sailing.
Speaking of different views, that same Reddit thread had an interesting bit about why BYD stock might feel a bit slept on, especially by U.S. retail investors.
Yeah, the argument floated was partly just visibility. They don't really sell cars in the US because of tariffs. And then there's the practical side. Investing means dealing with the Hong Kong listing or maybe a less common ADR, which isn't as straightforward for everyone.
Right. And there was another angle, too, about how to even value BYD.
Yeah, the idea that maybe you shouldn't just see them as a car company. They're involved in energy storage, AI, robotics. So should they be valued more like a diversified tech company than a traditional automaker?
Interesting perspective. And it sounds like some investors in that discussion have done pretty well.
Oh, yeah. People mentioned being up 25% recently, others doubling their money over a few years, some even talking about quadrupling their initial investment from longer ago, referencing early backers like Buffett and Munger.
And they were discussing that recent news about the share issue.
The capitalization share issue, yeah. The plan to give out 12 new shares for every 10 held, plus bonus shares and a cash dividend.
Sounds complicated. What's the goal there?
Well, the stated goal is rewarding shareholders and maybe making the stock easier to trade, more liquid. But as one user rightly pointed out, when you issue more shares like that, the price per share usually drops proportionally.
So your total investment value might not change much initially, just from the share split part.
Right. Though the cash dividend part is a direct return to shareholders.
Okay, so lots for investors to chew on. Ultimately, as Sackville reminded us, everyone's watching the competition, those profit margins, and those big geopolitical risks that could always shake things up.
So we've covered a lot. After digging through all these different sources, what's the takeaway for you, the listener, whether you're deep in the auto industry or maybe just thinking about your next car?
Well, that new energy company source offered a pretty neat summary for potential buyers. It basically framed it as, if you're looking for affordability, solid quality, and maybe you like backing a fast-growing global challenger, BYD looks like a really strong contender.
Right. But if your priorities lean more towards, say, absolute cutting-edge performance, maybe the most advanced software features like driver assist systems, and that premium brand feel, then Tesla is still positioned as the benchmark there.
Yeah, what really comes through from all the sources, though, is that these two companies, they have very different playbooks. BYD with its deep vertical integration, cost focus, that non-US global push.
Versus Tesla's software leadership, performance edge, and that established charging network.
Right. They're both just fundamentally shaping the future of electric vehicles, but in really distinct, powerful ways. It's not just about selling cars anymore.
It's a truly fascinating time in the industry. We've seen the proof of BYD's huge Q1 financial jump, driven by that innovation engine, their battery prowess, cost management, and that bold global strategy.
But we've also seen the real challenges they face. Those price wars brewing in China, fueled by inventory, the intense competition everywhere, and those cautious views raising flags about transparency, subsidies, safety, and the bigger geopolitical picture.
Yeah, it's a classic story. Rapid growth hitting real-world friction.
It really is. Which leaves us with a final thought, something for you to chew on, based on everything we've discussed from these sources. Given BYD's unique approach, that deep in-house tech, the focus on cost, the strategic expansion outside traditional big Western markets like the US, how might their path, their success, actually change the game for the entire global auto industry? What does it mean for the legacy giants and for their direct rivals in the years ahead?